Hi and welcome to another edition of TraderCast's weekly market report. This is for a week ahead, starting on Monday, 1st of February. From the economic calendar point of view, we have a busy week ahead. The main data points will be on Monday. ECB President Draghi's speech is scheduled for 4 o'clock in the afternoon. On Tuesday, we have RBA interest rate decision and statement that will come overnight for our kind of GMT time here, so it's 3:30 in the morning. On Wednesday, 3rd of February, Bank of Japan Governor Kuroda speech will be closely watched. That's at 2:30 in the morning. And then non-monetary policy ECB meeting from 8 o'clock in the morning on Wednesday as well. Thursday, ECB Mario Draghi is due to speak again from 8 o'clock in the morning. And then at midday, 12 o'clock, we have Bank of England interest rate decision, and Bank of England's Governor Mark Carney is scheduled to speak at 12:45. So if you're trading FTSE, if you're trading cable, that will be a major market moving event. The big data point for the week ahead is on Friday, February the 5th. Just after midnight, 30 minutes past midnight, RBA monetary policy statement comes in again, but everybody will be closely watching US unemployment and non-farm payrolls at 13:30, so 1:30 GMT. So that will be a big market moving event for the week. From the technical point of view, let's look at some instruments, and I'll try and cover 4 or 5 in a very short period of time. So this is euro dollar. Currently appears to be under pressure. This rising support trend line is challenged, and this 1.0818, 1.0820 level point of control will be closely watched, in the sense that bears will be in control below that level, and if the price bounces off that low and slightly moves higher, then these further upside resistances at 108.85, 109.25, 109.68, 109.70 would be seen as logical upside resistances. Confirmed loss of the current low, or maybe a spike higher, which might create a lower high towards 108.70, and then an aggressive sell-off from that level would indicate a bearishness. So bears will be in control below this 108.20, and then 107.85, 107.70 and 107.50 levels will be targeted as logical downside support zones. Therefore, these levels would probably be seen as a decent or a partial profit taking zones for anybody who is sitting in a bearish camp. This is DAX 30 or Germany 30. Still coiling, undecided. We are creating higher lows. This could be a shoulder, head and shoulder. We'll look at this in S&P a little bit later on. But levels to watch. First point of support at 97.30. Loss of that support would indicate continuation of this bearishness and downtrend, potentially targeting further downside support towards 96.50, 95, 93, call it 96, 9,600, nice and round number, followed by 95.23, and these levels are nothing more than just fibs from this low to this high and nice retracements. The alternative point of view would be if the price dips into that level, 97.30, and then rally from there, or if we see a rally straight away off these highs, then logical upside resistance is at 99.16. Only confirmed breakout above 99.16 would indicate that further upside resistances could be challenged towards 10,000, 10,106. S&P, very similar situation as well. This potentially could be seen as a shoulder. This potentially could be seen as a nice head and then shoulder again. So we have low, higher low, higher low. And if we assume that this is the neckline and this is the breakout of that neckline about 1900, 1908, and this is futures rather than spot price, then technical analysis would potentially indicate that distance from the top of the head to the neckline added on a breakout level could project further upside resistance towards 2000, and that 2000 level was referenced in the past many times over and over again. So we had touches from this multiple kind of a topping pattern here as well. So, and we can project it even further in the past, and it's been touched over and over and over again. That's one view. So that will be a bullish outcome, and a bullish outcome would call for the further upsides to come. First logical resistance on the upside, therefore partial profit taking zone for anybody who's sitting in the bullish camp, is at 1946, 1950, 200 period moving average, and also a cluster of these lows and these highs. The other alternative is if we see a pullback from that 1950 or from the current level into this kind of zone here, then 1910, 1908 will offer a first logical level of support, followed by 1900. Only a loss and a red candle closing, bearish candle closing below 1900 would negate this breakout, and then it will become this rising wedge, or maybe a flag, or it'll morph into something else. So bearish below 1900 if we see a dip below, and then potential further downside to come. Alternatively, as long as the price stays where it is, first point of resistance at 1946, bullish above that level as well. Gold appears to be creating another continuation pattern. We have a sequence of higher lows and higher highs, although there was a little bit of a decoupling lately between gold and equity prices. So we have a rally in S&P, but we also see this potentially bullish pattern in gold as well. What's happening here is first point of reference is at 1118. Breakout and confirmed candle closing above that level in your chosen time frame could potentially indicate there is further upside to come towards 1122, 1128, maybe even 1133. The opposite would be if the price stays where it is and the price dips lower very quickly to retest this first logical downside support towards 1108. Only a loss of this 1108 would indicate further downside pressure, targeting supports at 1104, followed by 1100, maybe even at 1091, 1093. The last thing that I want to talk to you about is gold. It's crude, guys. We saw a fairly substantial oversold bounce back in crude. That bounce back initially was triggered by a Russian energy minister saying that they're proposing a meeting for OPEC and non-OPEC oil producing countries, and they're looking for the way to maybe stabilize the prices and put the floor under the prices by suggesting that production should be cut by 5% across the board. That oil kind of rallied, and then that was very quickly denied by Saudis 30 minutes later. So let's keep an eye on this and let's watch it. This is still fairly embedded downtrend, although we're seeing a cold weather in US, therefore more demand for derivatives and heating oil, therefore for crude as well. So levels to watch is breakout above this 3270 indicates potential further bullishness, targeting 3471, 3584 and 3680. That would be that falling resistance trend line and 50 period moving average, FEB retracements, a number of things here. The other alternative is either a spike into this zone and then sell off from here, or pullback from the current levels would target further downside support towards 3270. Loss of 3270 would be quite negative for this oversold bounce back, potentially targeting further downside supports towards 3170 and 31. Hopefully you've enjoyed it and you're finding this beneficial. Talk to you all next week, and for the members, I'll see you during the live trading broadcasts on Monday. Stay safe and happy trading.